This video chart presentation is Uranium Energy Corp. Uranium Energy is an AMEX listed stock trading our ticker UEC. Uranium plays have been having a tough time throughout the better part of 2012. See, UEC has fallen from a high of 444 down to around the 220 range. This is a look at a 3-year weekly chart. And I thought it was particularly important to note this is on a pretty solid support level at this point. With the indicators going into oversold territory, this could be a good point to watch for a bounce for this chart. Now I see it's been a pretty steady slide over the last couple months, so we're not going to get a lot from these indicators at this point. See the MACD heading down. What I would look for is a rotation, make a high or low at this point, try to put together some sort of upward trend in the long-term picture of things. Similar with PPO, the ADX does indicate that the downward slide is gaining a little bit of strength. Money flow index, reflective of the selling pressure. Accumulation distribution, of course, is dropping off as well, but it's near a point right now that I'd look for to try and bounce as well. Checking money flow, not too far from zero. Primarily buying pressure has been overcoming selling pressure for quite some time. It's not very frequent that selling pressure becomes very dominant, so again I'd have my eyes peeled for a reversal there. CCI for a bottom play. Bottom feeders use the break of negative 100 as the buy point. Full stow is buried into oversold territory. Again, I'd be looking for a technical correction. And the tricks, like the MACD, I'd be looking for it to hold around zero and develop an upward trend. As I mentioned a few moments ago, RSIs get buried into oversold. 7 is only registering 18.45. The indicators going into that oversold territory, coupled with a historically strong support level around $2.10, is the reason I'd want to see how this performs this week. I'd have to scale back even farther than this 3-year chart, but judging through there's not really much support again until $1.25. So holding around this $2 mark is a key point for UEC. To the resistance side of things, I start looking again at this 50 and 200-day moving averages as some dynamic resistance. I see a little bit more right there around $2.65, $2.70, just based on the support level that was formed in 2011 in that area. Now with this closing at 223, from a percentage standpoint, that's already a pretty decent upside to go back and challenge that first resistance. And if it does break through that, I don't expect it to really see much more along a strong resistance line until around $3.80. There's plenty of volume in this play. 5 million shares traded last week. That's right about average, perhaps just slightly above average. Generally speaking, there's good liquidity in this play. And from a technical standpoint, when a stock has a close support level and a substantial upside should the support hold, it's a chart certainly worth keeping on radar. Should the overall metal markets come bouncing out of oversold territory in general, I'd expect UEC to follow along. But as always, it's merely my interpretation of the Uranium Energy Corp chart. Thank you for watching and trade smart.